Good afternoon, and thank you everyone for joining us today for our special presentation on blockchain technology and cryptocurrency with a special guest, Travis Morehead. In just a second, I'm going to introduce Travis, but I want to take a moment to explain a little bit about Advanta and what we do. My name is Larissa Green. I'm Director of Education with Advanta IRA. I've been with the company for about 6 years now, and I've been doing webinars and seminars for just about 5 years. If you guys are not familiar with Advanta IRA, we don't give any investment, legal, or tax advice, but if you do have those types of questions, go ahead and ask them, and we'll see if we can't put you in touch with a professional who can answer those questions for you. We are a self-directed IRA administrator. What that means is we can hold those private investments that you guys are interested in. We've been doing this for about 15 or more years, helping our clients get invested in private investments. We have 2 offices, one in the Tampa Bay area of Florida and Atlanta, Georgia, but we can help any client anywhere that's interested in investing retirement funds into alternative assets. We do seminars and webinars all the time, always at no cost, so if you're interested in joining us for more webinars like this one, you can check out our events page at advantaira.com. We have live seminars at our offices and in the surrounding areas, and webinars just about every other week on all kinds of topics concerning self-directed IRAs and alternative investments. Many people have not heard of self-directed IRAs, and the reason is very simply there are not a lot of administrators out there that will hold privately held assets. They've just simply made it a business decision that they don't want to hold assets that are not publicly traded or what they consider hard to value. So we really are filling the niche in the industry in there where we will hold any private asset as long as it's within the IRS rules. We'll help you make sure it's titled properly and then hold that asset and do record keeping on your behalf and help you and assist you in any support that you need for that asset. Any type of IRA or retirement plan can be self-directed. Traditional and Roth are, of course, the most common IRAs out there. The traditional because you can roll an old employer's plan into it, and a Roth, of course, because it's the tax-free way to invest for retirement. But also the simple individual K and SEP IRAs are available to those people who want to hold employers' plans. If you're a sole proprietor or an independent business owner, those types of plans might be something you want to look into. We can also help you with education savings accounts and health savings accounts. And even though those accounts are not IRAs, the rules for self-directing them are the same. And so we can assist you with holding the account and doing the record keeping for them. How is money moved to a self-directed IRA? Well, it's an IRA just like at any other administrator, so you can either do it through a transfer or trustee-to-trustee transfer where you're moving from like IRA to like IRA. You can do transfers as often and whenever you like, and there's no taxes or penalties for doing so. You can also move funds from an old employer plan through a direct rollover where you request the funds, provide them with the information, and they would send a check to Advanta made out to your new account, and it would be deposited directly. Again, no taxes or penalties for doing so. Transfers, direct rollovers, and earnings within a retirement account are unlimited. Just to give you guys an idea of what types of investments are out there for self-directed IRAs before we move on, real estate is going to be the most common investment we see, but it only makes up for about 30% of the assets that we hold, just to give you an idea. You can also do private notes and mortgages. Gold and silver bars and coins and other metals are permissible. LLCs, and we could be talking here about single-member LLCs or investing simply into a company holding private stock. We've also seen farm animals, movie projects. You can use your self-directed IRA to invest in foreign currency. And then, of course, what we're going to be talking about today is cryptocurrency. And with that, I'd like to introduce Travis Morehead. He's going to be talking to you guys about cryptocurrency. If you have questions, please type them into the chat box and we'll make sure we get to them. Travis?
Thank you, Larissa. I am happy to be here today. I appreciate the opportunity to share one of my big passions, which is Bitcoin and cryptocurrencies. I did create a presentation that's really basic. So this first presentation, perhaps I'll be invited back if there's interest. But my first presentation is really going to be very basic. I'm going to go over the history of what Bitcoin is, cryptocurrencies, how they work, where you can go to get some more information, and all of those type of things. So let's go ahead and get started. Just about the history of Bitcoin. So Bitcoin was created in 2008. During the financial crisis when the banks collapsed, there was a guy named Satoshi Nakamoto that released what's called the Bitcoin white paper. Now, we don't know who Satoshi is. Satoshi is somewhat of a mystery. He did come out, he was anonymous. He's disappeared completely. We don't know if he's a group of people, an individual, if he's some people have fun theories like it's an artificial intelligence or even aliens. So nobody knows who he is, but the way the technology is created, it doesn't matter who he is for it to work. So it's pretty neat. The white paper was launched in 2008, and then Bitcoin itself was actually launched in 2009. All right, the history of money. So before we talk about Bitcoin, I want to talk a little bit about the history of money and what brought us to where we are today. So prior to 10,000 years ago, before we used the money that we use now, we had a barter system where I would exchange, maybe with Larissa, I would exchange an item with her and she would exchange an item with me, and that's how we conducted trade. Over time, as culture and society got more complex, so did our trading. So eventually we started using gold, seashells, silver, things of that nature to be able to do more complex trades between multiple people. And fundamentally, money has stayed pretty much the same ever since then. We had gold-backed currencies. Most people don't realize this, but it actually took 400 years for people to actually go from a gold or silver currency to a paper currency. People were very resistant in the beginning. But we had a gold-backed currency in the United States until the 70s. And then in the 70s, we changed our currency, and actually it was no longer backed by gold, and it was just a paper currency that basically represented a partial debt, a piece of debt. And the advent of the internet, when the internet came out, we started using credit cards and debit cards. That was created to conduct trade over the internet because it was difficult to, send money from one place to another over the internet without some kind of digital way to do so. So how money has been working? So since the advent of the internet, we've been sending money across the planet to other people, and when we do that, we've always had to employ a third party. So over the internet, if I send something to somebody else, typically I have to employ PayPal, Western Union, a bank account. There's always somebody in the middle, and employing that third party actually has a cost to it, as well as restricts some form of privacy. So why Bitcoin? What is Bitcoin, and why is it different? So Bitcoin itself is decentralized. There's no governments, there's no institutions, no businesses. No one controls Bitcoin, and that's the key to its success. There's many centralized digital currencies that have come out, and none of them have been successful because they were centralized and controlled by somebody. Since the history of man, when we started using gold and silver and all these ways to conduct trade, there's been rulers or governments or institutions, kings, queens, that have always manipulated the currencies in order to benefit themselves. So with Bitcoin being decentralized and not being controlled in that way, it actually gives people back that power and takes it away from the governments and institutions. Bitcoin can be sent without a bank or third party. So this is key. So now we no longer have to employ that third party. I can send money directly to someone else in another country, across the planet if I wanted to, without employing anybody else, and they would get those funds. Anyone can set up a Bitcoin account. Now this is huge. Now we don't think about that a lot in the United States because we have a bank account in every corner. But many areas all over the world, people don't have access to bank accounts. But if you have a cell phone, if someone has a cell phone, they can instantly have a bank account in their pocket. If you go to some poor country in Africa, chances are you might not find anybody with a bank account. But you will find cell phones. Cell phones now there's more cell phones in the world now than there are bank accounts. So this allows the whole rest of the world to actually be caught up with the digital age and be able to conduct trade over the internet. Low fees. So Bitcoin's designed to have low fees. I'm not going to go into the details of this, but if anybody's been watching, the fees have actually increased recently. And there's actually solutions that are coming out this year. Even this month, there's actually been some changes that are going to be lowering those fees back down to pennies for transactions. It'll be cheaper than any other way to transact business. There's no chargebacks. So this is huge for a small business owner. If I go to a coffee shop and I buy a cup of coffee with Bitcoin, I can't, revert that. I can't cancel that transaction. I can't take my money back. But if I pay with a credit card, I could call my credit card company and say, I didn't pay for that cup of coffee, and that fund could be held up for an indefinite period of time for that small business owner. So this is huge for small businesses that might want to consider accepting Bitcoin as a form of payment. Chargebacks, refunds, things like that can actually be built into the money, where people can actually get refund policies and things like that. There's no borders. So no borders is huge. If we look at countries like Venezuela or Zimbabwe, their national currency is dropping like a rock in a lake. It's just sinking, sinking, sinking. So in Venezuela, for instance, almost 90% of their population is completely unemployed or underemployed. They're not making enough money. So they're sending their working class outside of Venezuela to be able to find work. When they find work and they send money back to their families in Venezuela, the government and institutions, the banks, they take 50% of that right off the top. So if I send $100 right now into Venezuela, they're going to take $50, the banks and government, and $50 are going to go to the person that's on the receiving end. So that's just not fair. So people in countries like that are actually adopting Bitcoin faster than anybody else, so they can conduct across those borders without the government's institutions taking their money. And so, one thing we'll see in the United States is we're actually one of the last ones and the slowest to adopt this technology, where it's actually being adopted all over the world right now. We have the U.S. dollar, which controls, the world's currency. So there's less reason for or need for it in our country. The technology itself, blockchain technology, which we'll be talking about in a second, has a potential to disrupt every major industry. So there's a coin called Civic. Civic is a coin that actually allows for identity. So if I upload my license, my social security number, my passport, all the information that makes me who I am to Civic the coin, in the future when I go to verify who I am, I would use Civic the coin to verify who I am, and that person on the receiving end wouldn't get any of my personal information. So that would actually end identity theft. We can put titles of real estate on the blockchain, where where everything would be open. We wouldn't need a title company anymore. There's a coin called Salt, which is a lending platform that will allow us to pool our money together to actually lend it out. We could take care of health insurance. We can actually set something up where a vendor, hospital, doctor actually gives out a certain amount of value worth of services every year. At the end of that year, if the services weren't used, that money would be refunded back to that doctor. It's actually a way to actually get rid of health insurance. So this technology is coming, regardless if we want to admit it or not. It's already being implemented into industries all over the world. And we'll talk more about that as we go on. All right, so how does it work? So before we get into the picture there on the screen, I'm going to give you some different keywords or definitions. So blockchain technology. Blockchain is the software and the platform that Bitcoin is built on top of. So there's a number of coins that are now operating out in the world in addition to Bitcoin. They all have different use cases, but they're all using the blockchain technology. And that's what Bitcoin was originally created with, and that's what it currently uses to conduct transactions. The entire blockchain is an open ledger. So what I mean by that is every transaction that has ever happened with Bitcoin is actually open for anyone to go see. It's not locked away or hidden like it is with a bank account, or most third parties are hiding that information, where I can see the very first transaction that ever took place. If you wanted to see those transactions, you could go to a website called blockchain.info. It's just a third-party website that allows anybody to see everything that's going on with Bitcoin. You can see who's mining Bitcoin, which we'll talk about in a second. We can see the speed in which Bitcoin is being mined. We can see our transactions. If I send a transaction on my phone, I can click a link that will take me to blockchain.info and allow me to verify, that there's my transaction, how many confirmations it has. So it's all open. Now there's also something called nodes. Nodes is basically computers all over the world that are running the blockchain ledger. That ledger that I'm talking about is distributed, decentralized, all over the world in all different computers. So that's why you can't just shut down the Bitcoin network. You couldn't just shut down one computer or even a dozen computers. It's not going to affect the network at all because there's so many people all over the world running this network and these nodes. Now miner. What a miner is you can think of it a lot like gold, right? So when we have a miner mining gold, they're digging out in the dirt and they're uncovering new and finding new pieces of gold. That's basically what a miner is doing. They're solving complex math problems because everything is encrypted. They can't see who's sending what or how much they're sending. Everything is encrypted, but going through and solving these complex math problems, a miner will uncover a new piece of Bitcoin, and they will earn a piece of Bitcoin for solving these math problems. Miners are what verifies and secures the network. So if you look at the screen there, we got someone request a transaction. If I send a transaction to you over the internet, within 8 seconds you're actually going to get a confirmation that says, hey, Travis Morehead is sending you some Bitcoin. Now it's not fully verified until a miner has actually taken that and solved that math problem and added it to the chain. So you can see in that slide there, we got the transaction was broadcasted. A miner picked up that transaction and verified that transaction. One transaction, or not one transaction, but one block of information is solved every 10 minutes. So that miner solves the information, it goes on a block, and then it's chained onto the blockchain. So that's where the name comes from. It actually is then permanent, written in stone. This is part of the ledger. This transaction happened. And that's when we know that, okay, not only did you guys receive the confirmation that I was sending something, but now the miner has confirmed it, and that's what makes it real and permanent. And then at that point, when it's added to the blockchain, the transaction is complete. Before we get on to the next slide, I want to check and go over some questions real quick, if that's cool. Okay, with the fluctuations in Bitcoin value lately, what strategy do you see for investing in Bitcoin, long-term or short-term? Okay, so for me, all of this is a long-term hold. So right now we're like at the dot-com era. If we look at the number of people that know about Bitcoin, have heard of Bitcoin, we're about 80% of the population now of the world has actually heard of Bitcoin. Most of them have no idea what it is. The people that are actually investing in this technology right now is less than 3% of the developed world's population. When the dot-com boom happened, only 2.5% of all of the people, when they invested, that's when they considered the early investors. So right now we're in a very, very early investor phase, and for me, my strategy is buying and then holding for a long term. There's a lot of people that get caught up in the day trading, and they see this coin moving and that coin moving, but you can very easily lose your money. It's a very volatile market. Sometimes even the experienced traders can't predict what the coin's going to do next. So that's my strategy as a long-term hold. As far as the value fluctuating, it's a volatile market. It's going to go up and down constantly. If we look at 6 months ago, Bitcoin was about $3,000 a coin. So, it's pennies compared to where it's been. So from $3,000, it went all the way up to $20,000 in a period of 2 to 3 months. That's a huge gain. So anybody that knows anything about investing, things that move that quickly will also have a big retrace. So that's what we're experiencing right now, is Bitcoin's going through its retrace before testing all new highs. In my opinion, it's a good time to look at it, as far as if you haven't considered it before, possibly looking at it now. The next question we have here, Scott asked, do you think the government will get involved trying to regulate Bitcoin and other cryptocurrencies? I absolutely think so. I think they're already doing that, and they've already tried. So what the government did first, so they don't want to lose their control. The banks and the governments, they kind of rule the world, so they don't want to lose their control. You can actually see that the government, our U.S. government, there's 200 documented attempts by the United States government to hack Bitcoin, and it's been unsuccessful every single time. Bitcoin cannot be hacked. It's one of the most secure technologies that it's ever been created. So they can't stop it, so then maybe they will look at regulating it, right? So the first thing they did is they considered Bitcoin a commodity. So when you buy Bitcoin and then you go to sell it, it's a capital gains tax. And now they've actually, starting January 1st, they've actually changed the laws and the rules where now every time you trade between Bitcoin and, let's say, Ethereum, many of you probably heard of Ethereum, anytime you trade between two coins, the government is now considering that a taxable event. So something to consider while you're trading, especially if you're not in some kind of sheltered tax setup. Any other regulations? Let's see. So we have countries like Japan that are now legalized Bitcoin as a form of currency, and how I think they're looking at regulation is they're actually coming out with their own digital currency by 2020, and they'll be able to kind of control that currency. So they probably will actually build taxes built into that currency, is kind of how I imagine it. That's kind of how I imagine the future will go, is that the tax information and everything will actually be built into these currencies. So sure, yeah, there's going to be lots of regulation, all kinds of things that will be coming up in the future, and it's kind of fun to watch and see how they react. The reality is nobody can shut down Bitcoin. Nobody can stop it. Looks like we have another question. I'll go over that real quick before we get on to the next thing. Ultimately, over time, it's the intrinsic value of a Satoshi, Bitcoin, or any cryptocurrency, effectively the energy required to produce that. Yes, okay, so I understand the question. So the question is basically, is the value of the currency based on that energy requirement to mine the Bitcoin? And I would say yes. So right now, our governments are printing paper money out of thin air. There is nothing backing it. They just print it when they need it. It's kind of funny. I saw a meme going around on Facebook about cryptocurrencies or not even cryptocurrencies, about the government shutdown, and how did the government shut down if they're the ones who print the money when they want to print it? It's kind of a funny thing. But back to I guess the question itself. Yeah. So one Bitcoin, mining one Bitcoin is equivalent to about $1,000 worth of electricity currently right now based on electricity requirements. And this can change all the time. The more people that are verifying Bitcoin, the more difficult it actually gets to verify the Bitcoin. And so that value will actually increase over time as well. I'm actually somebody who's very into sustainability, so that's something that I've looked at myself. And what I can see is that this technology and the amount of energy it's using is actually pushing forward technology advancements to actually take care of that and actually create more sustainable electricity, which I personally think is pretty cool. I'm going to continue on the presentation a little bit. I'm going to get back to some of these questions. So some of these questions will actually be talked about as we move on. And so we'll go on to the next thing. So where can you spend Bitcoin? So Bitcoin can be spent at over 100,000 businesses in the United States. I already talked about how Japan has actually legalized it as a form of currency. The city of Dubai is accepting Bitcoin. And so I have personally bought my wedding ring at Overstock.com. I've paid for plane tickets with cheapair.com. I've paid for hotels with Expedia. I've bought a computer off Dell. I've bought multiple items off of Amazon. Using purse.io, you can buy anything off of Amazon for up to 15% off. I have a Shift Visa card, and what that is it allows me to spend my cryptocurrencies anywhere Visa is accepted. So there's multiple ways to actually use these currencies, and more people are being added to this all the time. Okay, so global banks, tech companies, none of these people are ignoring Bitcoin anymore. So about a month ago, 2 months ago, MasterCard came out to say they're going to be using blockchain technology to power all of their transactions. We have Goldman Sachs, which is creating their own cryptocurrency Bitcoin exchange. JP Morgan Chase, about 2 months ago, the CEO, Jamie Dimon, came out and said, Bitcoin's a fraud, it's a scam. The very next day, the largest purchaser of largest purchaser of Bitcoin was JP Morgan. About 2 weeks ago, Jamie Dimon came back out on there and just said, you know what, I made a mistake, Bitcoin's not a fraud after all. So there's a lot of manipulation in the market. We see it in the news, we see it all over the place, and I think a lot of that is old systems afraid of losing their control. The banks are now using this technology. I can buy anything off Microsoft with Bitcoin, and they're using this. IBM is, I've seen commercials during Sunday football that was talking about IBM using blockchain technology. So all of these people are now using this technology or looking to implement it. Alright, so hopefully you guys can see that, and it's big enough on your screens. This is the cryptocurrency market. So coinmarketcap.com is the name of this website, and it's somewhere that's kind of equal to the Wall Street Journal. So CoinMarketCap is the place you can go to. You can see all of the coins. You can see how much their value is. You can see the circulating supply. This is a very good website to go to for potentially investing in something. You want to see where it's at. One of the things you want to look at is the circulating supply. That's the number of coins that are currently in circulation, and you kind of match that up with price, and it can kind of give you an idea of how much money has to flow into that market in order for the price to react and move. So you can see in the top left corner there's 1,200 cryptocurrencies. The coin market cap, the cap of all the currencies there in the middle, was $196 billion. 24-hour volume was $5 billion. The slide I created here was actually created November 5th. So this is actually an outdated slide. And if we go to the next slide real quick. Okay, the next slide, you'll see this slide was created like a week ago or so. So we have over 1,300 cryptocurrencies there. CoinMarketCap from November 5th went from $200 billion to $659 billion. So it's over tripled just in the last 2 or 3 months. 24-hour volume, 40 billion. We can see Bitcoin dominance there, 37.9%. It just dominates the market. It always does. We can see Bitcoin was at $250 billion market. That's how much money was in it. It was 120 billion on the previous slide, and this is actually down right now. So this isn't accurate as of today, but this was when I created this presentation. The price of Bitcoin on this slide is 14,907. I know it's just a little bit over 10,000 right this second, so it does go up and down. You can see the circulating supply there is 16 million. And then there's a number of other coins, so I want to talk about that for a second. So all of cryptocurrencies, I see up there's 1,300 different cryptocurrencies. Most of them are scams. We can kind of compare this to the dot-com boom. Just because a website came out in the dot-com boom and had .com on the back and this is going to be something .com, everybody was buying it. Oh my gosh, there's a .com, we need to invest in this website. People are just throwing money blindly at these websites just because they had a .com address. That's sort of what's happening right now. In about 10 minutes, I could create my own cryptocurrency. That's it. It would take me about 10 minutes to create my own. There's a platform that makes it very, very easy to do so. And so you need to be careful. Not everybody's honest. There's been coins called initial coin offering. That's when a new coin is created. When that happens, they launch it online. It's initial coin. Come buy this coin. And you buy this coin, it's going to slice bread for you. You're never going to have to slice bread again. It's all your bread's ever going to be sliced going forward for the rest of your life. It all sounds great. You invest in this coin, the coin launches, and then they walk away with your money. It happens over and over again. So you just have to be careful when you're looking at which ones you want to invest in and make sure that they have a team behind them that's legit and there's some type of real use case purpose and they actually have the technology to pull it off. So let's go down the list a little bit of this screen. So we have Ripple underneath Bitcoin. Ripple is the bank coin. So a lot of people want to know about Ripple, I'm sure. It's actually no longer number 2 right now. It's actually back to number 3 or it might be number 4 now. So Ripple is the bank's coin. Earlier we talked about potential regulation. So if you can't regulate them, you can't stop it, you can't hack it, you can't break it, then what's the next step? You can't beat them, you join them, right? So Ripple is the bank's coin. It's a centralized company, so it's not decentralized like Bitcoin. Its purpose is to facilitate trade between 2 banks across borders and different banks to make things faster and quicker. Like I said before, the banks are now using this technology because it's quicker and faster and safer than any technology they've ever used before. So Ripple is that answer for the banks. You'll see the coin market cap was 91 billion. It's already gone down since then. It actually could be around there right now. I don't watch this coin, a whole lot. Circulating supply, 38 billion. So this is a huge number to look at. So Bitcoin, 16 million coins in circulating supply. There will never be more than 21 million Bitcoins. Now, before you say, well, wait a second, one Bitcoin's $14,000. I can't afford to buy one Bitcoin. Maybe I could almost buy one, or maybe I can afford 10,000, but I can't afford 14,000. One Bitcoin can be divided up to 100 million times. So 100 million individual units, one Bitcoin can be divided into. So it's important to realize that. So back to Ripple. Ripple has 38 billion coins in supply and 100 billion total. The 100 billion is actually pre-mined. They don't have a mining process that creates a decentralized network like Bitcoin does. It's actually a centralized network. So every month, Ripple, the company, actually releases 100,000 to 300,000 Ripple coins, and they sell those to the bank at discounted prices. So, there's probably some money to be made with Ripple. The price will probably go up. I myself, I don't invest in it because it kills the dream. It's everything that Bitcoin's not. It's pretty much keeping everything status quo by using Ripple. Ethereum is like a platform coin. So one thing that I'm looking for when I'm investing in these coins and going back and forth between these is I'm looking for coins that are creating infrastructure for the future. So if we consider right now we're at like DOS level, right? So DOS computers, they had little applications you could write in code and launch these applications. But the reality is as Windows, Linux, Apple, Android, all of these platforms have come out, we don't use any of those applications anymore. So what I'm looking for is I'm looking for the next Windows, I'm looking for the next Apple. And so what I heavily invest in is platform coins like Ethereum. Cardano is one, there's EOS, there's Stratus, there's a ton of coins that are coming out with platform. We have Neo, which is the Chinese version of Ethereum. So there's all kinds of coins that are coming out to create this infrastructure, and it's where my biggest focus is. We have Bitcoin Cash. So Bitcoin Cash is a fork. I saw earlier we had somebody that had a question about what a fork is. So a fork is basically a split of the Bitcoin code. Bitcoin is decentralized, like I explained earlier. So there's a group of miners all over the world that are all verifying these transactions. It creates a true democracy. So what happens is maybe a group of miners say, hey, you know what? I think that this particular thing would be good. We should implement this into Bitcoin. The rest of the miners say, no, I don't think that's right. I think we should keep it the way that it is. So a hard fork would be as if the code changes and those miners went off one way and the rest of the miners stayed the same. So that's what Bitcoin Cash is. It was originally a code fork of Bitcoin, and it forked and split off. You have the original miners, a lot of them are sticking with Bitcoin, and a group of miners went and started mining Bitcoin Cash. And so that what gave Bitcoin Cash the ability to continue to operate, is having those group of miners. And that is a hard fork. There's also something called a soft fork, where they just update some information and upgrade the software of Bitcoin. There can be a hard fork without actually having a split of a coin if all of the miners agree. That's basically just changing the fundamentally design of how Bitcoin operates. There's lots of big words here too, so I want to stick it to as basic as possible, and somebody can reach out to me, or we can have another meeting to talk about things in more detail. And then we can go in more details about what Bitcoin Cash is and the potential future with it. But I want to keep it very basic for now. We have Cardano. That's another platform coin. They've handled scalability, where they're actually increasing scalability, which is really cool. Litecoin. So Litecoin is kind of Bitcoin's little brother. It's actually the second hard fork Bitcoin ever had, is actually Litecoin. Most people don't realize that. It has 4 times the amount of coins in supply, and just a pretty cool coin. I like it, and I hold quite a bit of it myself. And let's see, let me scroll through the questions real quick and see if there's any other that apply here. I will be talking about exchanges and wallets, so we'll get to that, Dave. Can encryption security be hacked with quantum computers? So I think down the road, upgrades, things are going to have to develop and evolve. Quantum computers are coming, and that is a threat to Bitcoin in a way. So right now, based on the technology that's currently out there, I've read several articles about this. They're saying that all 10 of NASA's supercomputers, all trying to hack Bitcoin all at one time, it would take them 10 years to do so, and they would hack 1/100 millionth of a Bitcoin. And they're not going to devote those resources to do that. That's going to cost a lot of electricity and wasted time in order to hack 1/100 millionth of a Bitcoin. So at this point, there is no technology available that can hack Bitcoin. As technology, evolves and develops, I imagine Bitcoin's code will also evolve and develop to become more complex and become quantum computer resistant. But at this point, it is completely safe, compared, as far as we know. Is there a tax implication for trading cryptocurrency? What is the best way to ensure you don't get caught up in regulation? So I kind of mentioned this earlier. If any time, it's considered a capital gains tax, and it's considered a commodity. It's currently how the U.S. is treating Bitcoin. I think that down the road that will change. They'll be treating it as a currency because they're going to want to get the full taxes on that. But I definitely recommend talking to a tax or legal advisor to get the most up-to-date details. I am not either of those. I just know what I read. Why buy Bitcoin at 10,000 plus when you can mine it for 1,000 to 4,000? Okay, that's a good question. So there's 2 parts to this. So one is it's very difficult to get the equipment. So the newest equipment to mine Bitcoin right now are called S9 ASICs units. Application-specific integrated circuit chips is what ASIC stands for. So when you mine Bitcoin in the beginning, we could mine it with laptop computers, or regular desktop computers. Very easy, wasn't a big deal. But over time, difficulty has increased with Bitcoin, and that mathematical equation is getting more and more difficult. The reason why is because there's a set number of Bitcoin that's released each day. Each block, I talked about that earlier, there's 1 block released every 10 minutes. 1 block contains 12.5 Bitcoin reward for that miner. It was 25 before that, before the last half event. And then the year before that, when Bitcoin first came out, it was 50 Bitcoin per block. Every 4 years, that block reward gets cut in half. So it's constantly getting smaller and smaller and smaller. Satoshi visualized that there wouldn't be any value to Bitcoin in the beginning, and so we needed to have some kind of high reward. The long-term transaction fees will be what rewards the miners, and there will be no more block rewards as far as new Bitcoin being found. So back to the question. So why not just mine it for $1,000 to $4,000? If you set up a mining rig today and you started mining it, it's not like you would earn 1 Bitcoin right off the bat that first month. So it's very complicated. So one, you have to know how to set up the computer. You have to be able to get the newest equipment, because if I try to mine with my desktop computer, I'm never going to earn any Bitcoin. If I use one of those ASICs units, which is going to be the most efficient way to mine Bitcoin right now, I would have to buy one. First, I'd have to find one. So right now, if you go to Bitmain, Bitfury, any of these sites that are actually building this equipment, they're completely sold out. You can't buy it. Now, once in a while, for a couple days at a time, they'll pop up where you can buy the equipment. A lot of times you can find the equipment used, but anybody who knows electronics knows that the more we're using a certain piece of electronic equipment, the less efficiency it has. And so that's something to consider if you try to go buy a used equipment. It's probably already been burnt up, and that's why somebody's trying to sell it so they can buy some newer equipment. So $1,000 to $4,000 is actually somewhat unrealistic. You might be able to find one machine, but chances are, unless you have $100,000 plus, it's going to be difficult to mine Bitcoin. So hopefully that answers your question. We also work in pools, so that's another thing to consider with mining. I mine myself, and so I work in a pool with other people. So basically, if we have a room full of people, let's say we have 10 people in a room, we're all mining Bitcoin. It's basically like a lottery system. So if you try to mine Bitcoin on your own, you're probably not going to get anything. So we work in these pools because one of us is likely going to solve this math problem. Let's say I solve the math problem the first day. Because I work in the pool, I will divide that earning that I made up among those 10 people. And that way we can share in that reward. The next 2 months I might not get another reward, but let's say everybody else in the group does. I still am receiving a little bit of benefit based on those other people that are mining. So that's sort of how mining works. You can definitely get into it and try to mine yourself. If you guys want us some information over or have questions about that in more detail, I'm happy to answer it. I'm going to skip it to keep this presentation as basic as we can for now. Discuss investing in crypto ICOs a little. So again, ICO is considered an initial coin offering. So it's kind of like the IPO. It's kind of a play on the same thing, initial public offering. An ICO is a brand new coin that's being released for a certain purpose. So there's a lot of people that invest in these things, and from my experience, it's impossible to predict which ICOs are going to take off and which ones are just going to run flat. More often than not, when I invest in an ICO, I've noticed that when they actually get released on the market and in an exchange, it dips below what I paid for it originally. So my strategy personally to invest in ICOs is I want to make sure that it's a legitimate company. I want to do the research to find out who it is behind the coin, what have they done before, what kind of successes have they had. What kind of developers do they have? I want to learn everything I can about that coin before I even touch it. So that's one thing that's very important, because you can have those people that just walk away with your money. But if you've done all of this and you've done your homework, how I would proceed myself is I wait till the ICO is launched and I wait for that initial dip. People have been holding their money in there for a month or two, and a lot of people are antsy just to sell it and move on to the next thing. And so when that happens and that price drops is when I pick it up. So that's kind of my strategy with ICOs, and everybody's got a different strategy. I know some people I have a friend that invests in every single ICO he can get his hand on, and just hoping that one or two will make up for the losses that he gets on the ones that aren't very good. So everybody's got their own strategy there. How do you research the validity of a coin? So CoinMarketCap is one place. So you can search for the coins. Once you find a coin that you want to do more research on, you can Google it. You want to find out, usually you can find a website tied to all these coins, and when you find the website, you want to go and click on About Us and figure out who the developer is, who's the CEO, who's the CFO, who are the people that are developing this coin. So that's one thing you want to look at. And, that's from there, I look at LinkedIn, so I actually take those persons' information, I go to LinkedIn and places like that so that I can verify who they are and what they've done before. Alright, so I'm going to move on, and I'm going to come back to some more questions. I know we have some more questions that are constantly being added on there. We'll move on for now, and we'll go back and answer some more questions in a bit. So where do you get Bitcoin? This is kind of a basic answer. So there is Bitcoin ATMs. They're popping up all over the place. They actually call them BTMs. So that's one way to get it. There's also cryptocurrency exchanges, so there's a number of those. There's Coinbase, there's some other exchanges, GDAX you can use, which is tied to Coinbase. There's lots of different exchanges if you look for cryptocurrency exchanges. So that's one way to get Bitcoin. There's also there's two different types of exchanges as well. So you have the exchanges that allow you to buy Bitcoin with your national currency, and then you have exchanges where you can take Bitcoin and you can buy these other cryptocurrencies. And those exchanges, there's Binance, Bitfinex, Poloniex, Bittrex. There's a lot of different exchanges you can get involved in. And also, of course, peer-to-peer. So if one person has Bitcoin and they want to sell Bitcoin, you could buy Bitcoin from them. So that's another way to do that. And then also IRAs. So now IRAs are able to purchase cryptocurrencies and keep that tax-deferred benefit. I also want to talk about keeping your Bitcoin safe. So this is important, or any of your cryptocurrencies. You want to keep this stuff safe, right? So we don't have FDIC insurance that's going to bail us out if somebody, steals our money. If somebody steals your Bitcoin or something happens to it, you're out of luck. So, in order to keep your Bitcoin safe, there's a number of different methods. One thing to consider is if you are trading in your cryptocurrencies, you want to make sure that you're not keeping them on the exchanges. If you Google Bitcoin hacked, you'll see a ton of different things that have come up. We've seen Slush Pool get hacked. We've seen this mining company get hacked. We've seen Mt. Gox, which is probably the most famous example. Bitcoin itself has never been hacked, but these exchanges get hacked. And when exchanges get hacked, they have access to everybody's private key, is what it's called. And that's pretty much the keys to your bank account. Whoever holds that private key holds the Bitcoin. So they can actually send the Bitcoin when they hack in, and send the Bitcoin to another address. And there's nobody that's going to be able to refund that for you. It's gone. It's gone forever. So keeping Bitcoin safe is key. So I don't leave my money on the exchanges. I might make a trade or trade from one currency to another, but then I'm going to be pulling those things off, and I put them into my ledger. So or any kind of cold storage. So cold storage is basically you're taking your Bitcoin off of the internet. That's the safest place for it, is off the internet. You can do a paper wallet where it has your private key and your information on a piece of paper, and you keep that in a safe. You can use things like the Ledger or a Trezor, who are both digital storage devices. Again, when you have them unplugged, they are off the internet. So there's a number of ways to store your Bitcoin, but you want to make sure you're keeping it in some kind of private situation, private safe place. So personally, how I handle my Bitcoin, so I have a Bitcoin wallet on my cell phone. That's basically like a wallet in your pocket, like you normally have a wallet when you're out, at stores and such. I keep the Bitcoin that I may trade with or buy something with in there. And then I have a device that I keep where I keep the bulk of my Bitcoin on. And so that way I keep the devices separate. My cold storage device, which I use as a ledger, my cold storage device is my bank account, and my cell phone is my normal wallet that I walk around with. That's a good way to kind of consider what that, what that looks like. And that's pretty much the end of the slides, but I'm going to go back into these questions now, and feel free to ask some more questions. What are your strategies for selecting altcoins if you're on a very modest budget versus only using your investment money for only a fraction of Bitcoin? I'm not a financial advisor, so I can't, take whatever I say and do your own research. I can't tell you what's going to be the best bet. One thing that I can tell you is Bitcoin is the largest coin. It's always the most dominant coin and has the largest market. So if you have a limited budget and you don't have a lot of money to invest, in my opinion, Bitcoin's always a safe place to start. Bitcoin doesn't have, it's got the test of time. It's been around for 7 years now, where most of these coins have been around for, some of them only months, where Bitcoin's been around for 7 years. It's been Mount Everest for hackers. People have tried to hack it, no success. It's stood the test of time. And and sometimes, or right now, people are saying, oh, well, Bitcoin's dead, it's over. And the reason why they say that is because of the transaction fees and scaling to a mass scale. So I didn't talk about this earlier, I was kind of skipping it, but we'll go into that a little bit. So transaction fees a year ago with Bitcoin were less than a penny to send a transaction. 3 months ago, if I send a transaction, it was about $3. Lately, if I send a transaction, it can be as high as $50 to send one transaction. Now that's not practical for a transactional currency. It may be practical for a store of value like gold, but it's not necessarily practical for spending on a regular basis. That's a lot of money to pay to send money somewhere. And so there's a thing called segregated witness, lightning network, and atomic swaps. I'm not going to go into details about what those things are, but they're all things that have already been implemented into the Bitcoin code and are starting to roll out and go live right now. There's been the first lightning network payment on Bitcoin blockchain was conducted yesterday, and it allowed somebody to buy a VPN service with Bitcoin through this network. It costs less than a penny to send that transaction. So that's the future we're heading towards, is actually additional levels built on top of the blockchain technology with Bitcoin. And so people that say Bitcoin's over, transaction fees are so high, they don't understand the technology or what's coming. I really pay attention to those things. I go into the chat rooms and I talk to the developers and try to follow those things so that I know what's going on. And so, to go back to your original question, modest budget, what altcoins would you recommend? If Bitcoin is definitely one, so I always keep 30% of my money is pretty much in Bitcoin. And then it's always safe if you don't want to do the homework or you're a little nervous. The top 10 cryptocurrencies tend to stick around for a while. So if you look at CoinMarketCap and see those top 10 coins, those are ones that you could probably invest in. Now at the same time, they're already at the top of the market cap, so maybe there's less potential earnings, but the risk is lower, if that makes sense. So the more risk, the more the coin that's not really adopted fully or people aren't fully using yet has the most reward as far as potential gains, but also has the most risk to maybe not do anything or even fall flat. And so that's my final answer, and that's a big answer. All right, what is your opinion on the EU's plans to put the squeeze on cryptocurrency exchanges as a whole? So this is happening all over the place. So this isn't just the EU. We can also look at China, Korea. Let's start with China. So, and this has been happening since cryptocurrency came out. This isn't anything new. But in October, China came out and said, okay, we're banning all the exchanges. And there's no more coins that can be launched in China. We're done with all of that. Everything's banned. And that Bitcoin responded. Price went down. There's a bunch of fear in the market. It's kind of going on right now, too. But in that situation, there's fear. Everybody's afraid. And China's going to destroy it all. But the reality is this is a global market. China can't affect the whole market. And the exchanges immediately started packing up their bags and saying, okay, well, we'll just go to another country. We'll go to Thailand. We'll go to, we'll go to Japan. We'll go to Korea. And they started leaving. And China immediately realized, like, holy crap, we can't stop this, and we're about to lose all of this potential tax revenue. And they canceled it. So the exchanges were all reopened the same week that they said that they were going to close it. New coins can be launched, but it has to be on their coin, which is called NEO. So it's definitely something that is moving forward, and not something that I see as a long-term issue. Korea's done the same thing. Korea's got all this. They're doing the same thing where they're cracking down on exchanges. Everyone all over the world is going to be cracking down on these exchanges because there's all kinds of money being made, and the governments and institutions want their hands on it. Now, one thing to consider is there's 4 or 5 right now decentralized exchanges that are supposed to launch this year. A decentralized exchange means there's nobody in charge of it. Nobody controls it. There's no physical location to shut down. And so what this will allow for us to even exchange from our cold storage devices with other people across the internet instantly without anyone being in the middle. The government can't stop it. Institutions can't stop it. Nobody can profit from us with those fees. These exchanges right now are centralized organizations. That defeats the whole point of all of this. So when these decentralized exchanges are coming out, and I believe that they're being pushed along by the need for them with government regulation, who knows what can happen. It can't be stopped. I think that's the last question we have here. So we got a couple more here. The cost, we got 10 more minutes, so we'll go through some more questions, and then we'll end the webinar. And I am available, so you can call me, email me. I'm hoping to be invited back, and we can go into some more details about some different things as well. The cost of a machine and the increment cost of energy for a single Bitcoin or Satoshi. Well, I kind of discussed that earlier. So earning 1 Bitcoin or mining 1 Bitcoin is equivalent to $1,000 worth of energy right now. The cost of a machine to mine Bitcoin, it's supposed to go for about anywhere between $3,000 and $5,000. Some as much as $7,000. But the problem is it's really hard to get those machines. I heard it takes 10 minutes to mine a Bitcoin with the appropriate equipment. Sorry, we moved the button. So 1 block is mined every 10 minutes with Bitcoin. So every 10 minutes there's a block that is mined. Now if you have the equipment and you're mining Bitcoin, it doesn't mean you're going to get a reward every 10 minutes. It could be once a day, it could be once a month, especially if you're trying to do it yourself without joining one of those pools that I talked about earlier. It's key to be in one of those pools so that everybody can share in that reward, because you could mine for a month and not earn one thing, and then you're not going to get any of your money back. Did you discuss CME trading Bitcoin? I have not discussed it, but basically what that is futures trading. So now there's more and more traditional investment firms and organizations are coming out with ways to invest in Bitcoin without actually investing in Bitcoin. So the futures trading is basically predicting what Bitcoin price is going to be and gambling on that. So I have a friend who does that. He wanted to get me involved in it, and I told him no, I'd rather hold the coins themselves because they're increasing in value. In my opinion, there's more gains from actually holding the coins than actually doing the futures trading. But of course, again, I'm not a financial advisor, so take that with whatever grain of salt you'd like. Okay, so I'm going to end this with this last question. And again, I'm reachable. You can email me if there's something else you need to figure out or have questions about. Summarize again for us the top 3 advantages and risks with Bitcoin versus current payments. So advantages and risks. So I'll start with the advantages. The advantages, one is it allows for us to transact across the internet without a third party. Since the history of the internet, we've always had to employ that third party. And I kind of said that in the beginning, where now I can send money to anybody anywhere in the world without anybody having to employ anybody in the middle. So that's one. Another advantage is this is actually allowing people in third world countries and all over the world, anybody that has a cell phone, to actually now have a bank account in their pocket and actually participate in the world's economy. That's something that I think is really cool. And then the third advantage for me is the no borders. There's no borders, so people can actually send across their borders. So earlier I talked about Venezuela and the issues they're having in Zimbabwe. This now allows people in third world countries and all over the world that have a tyrannical government to actually be raised up out of poverty and go around that tyranny. So it's for me, this isn't just about money. I've been an activist for years, and I could go off on a tangent there. I'm not going to. I'm going to rein it back now. But I see the potential of this technology to take away money from state and money from government. And so, not to get political at all, but I feel that there's a lot of changes that could be made if we had the power again ourselves versus having a government or institution that holds that power. Risks with Bitcoin. I guess the biggest risk is obviously it not working and not succeeding. With that being said, I don't see that happening. We've already gone past a phase where now there's huge name recognition. People know what it is. Institutions, businesses all over the world are now using the technology. Risk, I guess, could look like which coin to invest in. Bitcoin is king right now, but there's always the potential of something else to come out that surpasses it, that's in the same arena. Yeah, I guess that's the big stuff. Current payments, credit cards, cash. Let me think about this some more. So let's see. Cash, it's kind of funny, but it's so easy to get caught up in political stuff here. I'm trying to be careful. So the cash, Bitcoin can be tracked, so it's not completely anonymous. So that's one big thing. Most people think, oh, well, Bitcoin's only used by the black market and to do drugs and all these things. But Bitcoin itself, because of that open ledger, you can see whenever an IP address sends it to another IP address. An IP address is basically your location on your computer, which can be tracked back to you. So the government can actually track who's sending these things, and they're already starting to look at that stuff. So as far as cash goes, it's actually more of a criminal's currency more so than Bitcoin can be. Now, there is currencies that are addressing, the anonymous aspects, as well as the Lightning Network that I talked about will actually create anonymous. But I don't know, just one of the things that makes it different. Credit cards, when you use a credit card, you're paying a fee to a credit card company to process your payment, where Bitcoin, you're not doing that, so fees are less. But I think that's pretty much covers it. And I'm going to turn it back over to Larissa to close us out.
Thank you, everybody, for joining us today. I had a couple of questions about the slides. I will make the slides available to you. I don't know if it'll be emailed with the recording, but I'll do what I can to get those out to you if you'd like them. If you have any questions, you can reach us at Advanta, and also Travis's information is up there. And with that, I'd like to thank everybody and hope that you'll join us for another webinar soon.